Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today, and it's customized to fit our guest. Is the poll surprise priced in, and are all eyes already beyond that or not quite? I would love to hear what Vikash's clients are asking him and what is it that he's telling them. Can PSUs gain another leg, and have they increased the coverage on PSUs, considering that an MNC broker, the coverage might be limited, but has that increased? That's the key question again. And will regulatory action spoil the party for BFSI, or will BFSI, looking at the valuations, be a key performer over the course of the next 12 months? Let's pose all of these questions to Vikash Kumar Jain. He's a strategist at CLSA, joins us right now on the show. Vikash, it's been a while, but thanks for taking the time out. Hope all is well.
Thanks for having me. Everything's fine. Thanks, Niraj.
Well, it's lovely having you, Vikas. And you would have guessed that I'll start off with the obvious question. What is the chatter from your large clients around the election? What is it that you are telling them to do pre or post, considering election and valuations and more?
Sure. So, see, I think an event like that, and with the positioning that it has seen, there is obviously some bit of risk management that is required. I mean, none of us, some of those clients sitting in the UK could not have predicted Brexit. Similarly, such events, when it comes to trying to predict, a consensus amongst a wide crowd, with all its ways in which parliamentary democracies work, it's not, there's always that small inkling of doubt which is there. So there's obviously a little bit of kind of risk management which might be seen, something which is being seen going into that event in the last few days. Beyond that, I think the crowd in general is pretty convinced of a continuation of a third term. So it's only a little bit at the margin. Otherwise, I think everybody is invested and into seeing that continuation. So that's clearly a base case that the ruling party comes back with a reasonably strong majority. That's what the base case is. If there is any deviation from that, is what will lead to a much bigger move in the markets either side.
Because I'm just trying to understand how you think about it. Different people have different opinions on this, but to run a government, you need 272, and not just individually, but even as coalition. My question is, from the last year's tally, I'm just trying to think about it tactically from a market perspective. If it's not a 300 number, but 10% plus or 10% minus, as the case may be, will that be a market moving number, or will it be a very short-term impact?
So let's try and understand what that number really means. Because I think beyond a point, it is about getting a bigger majority in the Rajya Sabha, and which will basically be, an event which gives you confidence that happens. Number two, an event that gives you confidence that there will be more states which will kind of come under the fray of the ruling party, and that basically means better coordination and better overall growth. Like, there are certain subjects which are clearly state subjects. There's only so much that the center can do about it. So market looks at everything eventually filtering down on whether this improves the outlook on growth or it deteriorates it. Now, if 303 was the number from last time, the rally that we've seen, which started in early December post the positive state elections, was slowly the build-up was that things are looking that government is likely to be as strong or stronger than that. That's why that number around 300 is relevant. Now, if the number is lesser than that, then the confidence on, that thing about Rajya Sabha and getting more states goes down at the margin, So that is how it could flow into maybe at the margin confidence on growth is a little lesser than where we've been. So obviously the most important number is 270, or I would say more like, so that clearly is the important number. But nonetheless, if it's going to be my guesses, now a lot of this has to be factored in, things are changing by the day. It's good that the market is going a little light into that event with the kind of move that we have seen in the market in the last 2-3 days. But clearly, 300, I would say, is at the margin. Lower than below 300 will be at the margin disappointment. The two numbers that we are working with rounded off is 300 and 270. Say I would say a number less than 300, is going to be at the margin disappointment. But if it is above 270, then it should still be digested. So that's how I would look at it.
Got it. Lest I'm sounding like making it entirely a political discussion, I'm not. But I have one more question on this, and which is this very interesting note that you guys came out with, which had some reference to Modi stocks as well. I'd love to understand if there is policy continuity, Vikash. How do you look at the next 5 years from a winner's perspective? I'll come to the earnings aspect later on in the conversation, but just purely from a policy, political continuity perspective, would there be winners that stand out?
Yeah, I think so. Good that you define the time frame. See, my opinion on stocks will be different depending on the time frame. What we need to very clearly appreciate is the fact that did you lose me for a minute? Or
yeah, but I can hear you loud and clear, Vikash, so no problem.
Sure. So okay, so what we need to understand is the fact that markets so the note that I wrote about Modi stocks, essentially that's just a catchy terminology to make things simple, but basically there are these 54 or so stocks, 27 of half of them being PSUs, the other half being non-PSU stocks linked to certain sectors, certain kind of characteristics, which are generally associated more closely to policies of the government. Now, the median return on these stocks is 50% in the last 6 months. 50%. 6 months again, because this has been the period of election rally. When the market has gone up by 15%, Nifty has gone up by 1.5, these stocks have gone up by 5.0. Median. There are stocks which have doubled. Now, that just tells you that there is a lot of excitement that has got baked into these stocks. Some of these stocks were cheaper, like some PSU stocks were cheaper. So they've kind of gone up, caught up to that, value trade, and they've gone beyond that. So from a perspective of more near term, if you were to ask me 6, 9, 12 months, of course, these stocks will have to, irrespective of the outcome of the elections, these stocks will have to, hold back, catch up on breath. So that goes that's how stock markets work. Nothing goes up, linearly every day. It is, they will have their fits and starts. And that's something which one should bear in mind. A lot of times when they have built in a lot of these positives at the start, there will be a catch up. Now, when I look at the last two times, the elections in 2014 and 2019, then there was this similar kind of a trade, and the PSU basket can be seen as the PSU index can be seen an easy proxy to capture this kind of election trade. Within a couple of weeks or within a few days after election results, in both of those instances, PSU stocks kind of as an index had an interim peak. Early June, I think broadly was the date because election results came out mid-May, both of those times. So, from that perspective, I think what also starts happening is post-election results, then you start seeing the ministers, and then the discussion moves to the budget, which typically is about 6 weeks, 5 to 7 weeks after the election results. So essentially, then there is a bit of reality check, which kind of happens. So from that perspective, there is going to be many of those events which will make people think that have these stocks moved, at least for the time being, a bit ahead of themselves. And that's why what we predict is a playbook similar to the last two times, and sometime in this month, a kind of an interim top for these Modi stocks, as a basket. Then you start separating out. Like right now, they've clearly, it's remarkable. 27 PSU stocks in the F&O basket, all of them have outperformed Nifty. All. These come from various sectors. So there's clearly a basket trade happening irrespective of the sector dynamics, which have kind of really played out.
Interesting thoughts on the burning question. Now to some other pieces as well. The fact that we may be in a higher for longer interest rate regime globally, at least US, if not Europe, and that's the mother market per se, how big of an impact could that have on risk asset valuations, including emerging markets like India?
Sure. So, a very relevant question. Firstly, let's try and understand on how the market moves during the remaining part of maybe the next 6 months or so, because 6 months, 6 months out, we have faced the US elections. Now, what has been happening with the Fed is slowly, this is a very remarkable thing that we've seen in the last 2 months, last 1 month particularly. Uh, you know, there's no big cool off in dollar. There is no, you know, rate cuts which have happened. But despite that, suddenly currency proxies like gold, silver have kind of gone, taken to the races. That's something which is telling you one very interesting thing, that in this election period or pre-election period, the market is uncertain if the Fed will do the right thing, which is required based on the fundamentals of inflation and every other thing. Because, there is a debate that whether the Fed will be pressured to still cut rates despite the fact that inflation is not fully under control, uh, because of it being, maybe politically inclined. Or at the same point of time, Trump generally been proponent of lower rates. What happens if he kind of comes in? And, so those are certain things which we should also bear in mind. For now, for this calendar year, I think there are certain commentators who kind of also bring out that if there is no rate cut uh, in June and July, sorry, the next meeting, then it'll be far too closer to elections to make it look like a non-political rate cut. So, there are all kinds of arguments which typically goes with elections, as you can imagine what's been happening closer home as well with our elections. So that is what makes the outlook on yields. That is why this traditional trade of commodities, dollar and yields have not really coincided like they would typically. So that's something that we should bear in mind. Nonetheless, from our perspective of Indian stock markets, higher for longer. More than that, 6 rate cuts is what we started the year with in terms of US Fed. That's down to practically 1.25 rate cuts in this calendar year now. I think I was checking today, they were talking about 30 bips rate cut in this calendar. That's like 1.25 or less than that. Now, if that is the case, then clearly what I expected should have happened has happened in the US market, but not in our market, which is banks in the US have outperformed. Like Dow Jones Banks Index is 10 percentage point outperformer over Dow Jones as compared to our market, where private banks have underperformed Nifty by 7-8 percentage points. So in a way, because we've been so focused, like I was explaining before the break, that there's these stocks. If you had those stocks, which are election stocks, Modi stocks, you would have outperformed. So we've been very focused on that trade. I think what will start happening once this election news is behind us is you start getting more closely linked to, the global macros and whatever's happening. Because even we don't see any big talk of rate cut immediately by RBI if the US Fed doesn't cut. So essentially, that should ideally be at the margin positive for banks. But our banks, private banks, which are now at one of the very few sectors which is very attractively priced, if you genuinely believe in the longer term growth story of India, I think that's where they should get a little bit of legs once this election news is behind us. We kind of get into more fundamental way of trading stocks.
Now, just one final question, Vikash. Does that have to do with foreign money also coming back? Because the supply has been the big reason why these guys haven't been able to build up at all. So does the foreign money come back? And part two of my question related to that, your conversations with your key clients globally, FIs have kind of shunned India, if you will, maybe in line with some other emerging markets as well. Does India make a comeback along with the EM basket, or would there be idiosyncratic flows that could come to India post-election?
So I think you're absolutely right on the color of money, because typically the crowd that has generally moved private banks up has been the foreign money, and with them turning sellers after the big inflow in December, uh, it's kind of not helped these stocks. Uh, what will they do? If you think about it, the call for them was a little obvious. If when China started working for the last 2 3 months, and many of them had gone underweight, and there was this big event in India which they did not maybe want to take a clear chance on, which was elections. So over the last 2 months, them selling and moving into other markets was a little bit easier. Now, what happens after, if election outcome gives them stability and more predictability for 5 years? At least at the margin, one factor will be better. But finally, it also depends on how much legs the Chinese market has. Like we saw in December, say from starting November, December 22 to still March 23, when China went up, India was actually underperforming, because it's a lot of them have moved out of China, and now when they have to chase performance to an extent So I think the other bit is out of our hand, but with the election thing, if it gets settled in a positive, stable way, at least that factor should be at the margin positive to invite foreign money back.
Got it. Vikas, can I squeeze in just one more question very quickly? Are you constructive from now on until the end of the year if, as we said, this event passes by with no major disruptions?
Well, I think this is something which we've had an opinion on right from the start of the year. This is likely to be a low return year at best, because the starting point is very inflated valuations. The last 6 months, because of this election event, we've kind of shunned that valuation. But suddenly, when things kind of come back and you take a fresh look at things, it is unlikely to be a big runaway rally unless there is a global runaway that we are part of from an India perspective. So I would say that given the strong performance that we've had over the last 6 months, there could be a bit more, a longer period of consolidation is what my guess is.
A longer period of consolidation. Fair call, Vikas. So good chatting with you. We should do this more often, really. And I know I say this every time, but we should, depending on how time permits you. But thanks so much for taking the time out and being with us today.
Thank you.
All right, that's the view from CLSA. Vikash Kumar Jain, strategist at the broking house, talking about how the possibility of it being a low return year and a lot of factors which might play into that. That's all on this edition of Talking Point. Thanks so much for watching.